Welcome to the Specialist Trading Weekly Stock Review for the week ending May 20th, 2011. Now in today's review, we're going to be covering pre-opening indications. This is extremely important, and I've covered this topic before, when entering our orders, because we never know exactly where the opening is going to be. It may be much higher, it may be much lower than our actual pre-existing order. So we have to make sure that we're responsible for the pre-opening indications, and I'll tell you exactly how to do that and whether you should take the trade or not. But before we begin, as always, we ask that you please take a moment to view our disclaimer. I'm going to show you the performance results from this past week's trades and signals, but remember that we can in no way guarantee that any of these results will be repeated in the future. So please take a moment to view our disclaimer. And while you're doing that, I also like to remind you that we will not have a weekly stock review for the following week. That will be the week of the 28th and 29th, or the weekend of the 28th and 29th. I will not be in town, so we won't be able to actually record anything. You still will be getting your nightly signals for the following week, but we will not have a weekly review going into Friday the 27th. Okay? All right, now I want to look at a couple of trades that were actually these were signals given on Thursday, the 19th, to go long. The first one was in EXPD, and we posted these nightly on our website. These were strategy number 4 trades. Our first one was strategy number 4 to go long EXPD. We won't really go over all the rules. We're just concentrating on our entries here. So the high for that particular bar was 52.80. So obviously our entry is going to be the next day at 52.81. Okay, so this is where we place our order, stop order. But this is why we always say it is your responsibility as the trader to know where the pre-opening is going to be, because many times there may be some news or maybe some worldly event where the stock will open much higher above your stop order. So you can't just simply place an order prior to the opening and then walk away, go to work or go on with your business. You have to make sure that you have some type of idea of the indication of where the stock's going to open, wherever it's been trading overnight. Now, had we just left our order in there, we want to show you what can happen. There are different scenarios. Sometimes they work in your favor, sometimes they work against you. But had we left our order in there, we actually would have entered, instead of 52.81, we would have entered at 53.08, a full 27 points higher. So we would have gave away 27 cents of our profit by paying that much higher. Now, this does not mean that we would not eventually exit this trade with a profit, but we will still be giving away 27 cents or a quarter of a point, and we will be making a quarter of a point less than what we normally would. So a lot of people, myself included, do not like to take this risk, knowing that we've given away a good portion of our trade. Remember, especially with strategy number 4 trades, we're not looking for these large gains. The average gain on a strategy number 4 trade is anywhere between 3/4 of a point and a point and a quarter. So we've just given away roughly about 1/4 of that particular average. So I did not take this trade. I know some of our members did take the trade, and they're still doing fine, but remember, we just want you to be aware of where the indication for the opening is going to be, because it's your responsibility. As members of Specialist Trading, we do not play the blame game. We're never going to be, accusing someone else of, ruining our trade for us, or we would have had a good trade if only this had happened and the specialist ruined it for me, or the market ruined it, or some news came out and ruined it for me. As members of Specialist Trading, we always know where we're getting in, and it's our responsibility. No one has to tell us to take the trade. Now, here was another trade that we posted that night in ITW on the night of the 18th, I believe, to go long on the 19th. So this was in ITW, once again, a strategy number 4 trade. The top of the particular bar we're looking at was 52.80, so we're going to enter our trade at 52.81. Now, where we would have purchased the last trade and it still would have given us some type of gains, in this particular trade, we would have paid up nearly a quarter of a point higher, and then look what would have happened by the end of the day. So in this instance, we not only are losing on balance on paper while being in the trade, we're also losing more because we paid up nearly a quarter of a point higher. So this is once again where we say it is your responsibility to know what the indications are going to be prior to the opening. Then you can decide whether you want to leave your order in there, or whether you can decide, hey, listen, it's trading up a little too high. I don't want to pay up anywhere from 25 cents or 50 cents higher. I'm going to exit the trade. Now, usually my benchmark is anywhere from 15 cents to 20 cents. Whenever I'm feeling especially strong about a stock or a chart that when I'm not thinking fundamentally, I'm talking about just the feeling I have of the particular chart, I will keep the order in there, but usually no more than 25 cents. On average, I'm somewhere between 50 and 20 cents. That's my threshold, and then I won't take a trade after that, okay? So it's really up to you. All right, now let's look at the stock positions that were initiated this week, and we're happy to say that we were 5 for 5. Out of the 5 trades that we took, out of the signals generated that we posted, we took 5 trades this week. Actually, we took 6 trades. 5 were winners, and we still have 1 outstanding that we have not closed yet. But it looks pretty much like we won't lose anything on that trade as well. First trade was an ETN, strategy number 4. We went short on the 16th, which was Monday at 51.65. We covered the next day at 50.30, made a little over 1.25 on this particular trade. As always, we ask ourselves, where is price in relation to the buy-sell line? Obviously, we're below. So we're looking for a setup bar using strategy number 4 to go short ETN. And we have to find a bar that meets all of the requirements, and the bar circled in blue is our setup bar right here. So this means if on the next bar we trade below this setup bar, we can go short. Well, we did. The next bar we traded below, and we went short at 51.65. We placed our stop at stop placement number 1. If you were trading more aggressively, you'd place it at stop placement number 2. And then we came up with our calculation for exit, which was 50.30. Okay? So as you can see, we entered short, and things were going our way that day, but not much of a move really either way once we got into the trade. But the next day, the stock fell out of bed, and we covered our short at 50.30. So we made a quick $1.35. Now, the first question I get with mostly our new members is, Steve, these are great. I love the strategy. I love a lot of the strategies, but strategy number 4 is great. Unfortunately, I seem to be leaving a lot on the table most of the times, as in this example right here. Well, this is a perfect example of how sometimes it's better just to take the generic exit, because this was ETN the day we covered, and looking at it 2 days later, you would have given everything back that you had just made. So many times the best exit is the planned exit using the proprietary formula that we give you. And we also have ways to try and extend your gains if you want to. It's just trading a little bit more aggressively, but that really is up to you. We usually just trade conservatively because we're trading other markets, and we take the very first exit and cover it. All right, so we made a $1.35 there. Our next trade was in FDO. 2 strategies here, strategy number 1 and 3. We took the first exit out, which was strategy number 3. We went long on the 17th at 52.32, exited the very same day, 53.23. Made nearly a point on this particular trade. All right, with strategy number 3, the same concept holds true. We're looking to see that price is above the buy-sell line, but we're also applying our proprietary Bollinger Band setup. Okay, right here. This is not the same setup that you usually find on Bollinger Bands. We've edited the length, and if you're not familiar with that, simply go to the video learning section. We tell you how to apply that. But we want to see price above the buy-sell line, and we want to see all 3 Bollinger Bands headed in the same straight, smooth, upward direction. Once we see that, then we want to see a sell-off. We want to see price decline, and once price declines, it touches these Bollinger Bands, but then we want to look for a bar that is completely below the lowest Bollinger Band, such as this bar right here. Once we find that bar, it couldn't have been these 2 because they were touching, but this one is our first setup bar. So this means if on the next bar we trade above this setup bar, we can go long. So we entered long at 52.32. Our stop is just below the low of the sell-off. And many of our students get confused. They'll place their stop just below the low of the setup bar. That's a totally different strategy, stop placement. In strategy number 3, our stop is placed below the lowest low of the current sell-off. And then our exit is we simply wait for price to close, the first close above the highest Bollinger Band. All right? We're not caring what direction the Bollinger Bands are going in, and we really don't know where this exit is going to be. So this is a dynamic exit, because the exit could be somewhere up here. It could be somewhere down here. We don't know where or I should say somewhere down in these lower levels. We don't know where the exit is going to be. So you can't simply place a limit order, because I know beginning students will see that, wow, we're up here intraday, so I'll exit. And then by the end of the day, the stock closes up here, and they've really left a lot on the table. So the best thing is just to wait for the close and it closed at 53.23, and that's where we exited for a nice quick gain of 91 cents. Our next trade was in AIV. Once again, two strategies, strategy number 1 and strategy number 4. Now we went long on the 18th at 26.16. We took the quick trade, exited the same day at 26.49 for a quick 33 cents. This is typical of strategy number 4. As I said, we're not going for the big gains. We're going for these quick captures in momentum, and then we're getting out very quickly. All right. The buy-sell line is way down here, so we're well above the buy-sell line. And we're looking for the bar that meets all the requirements to go long. That's our setup bar. None of these bars fit the requirements except this bar right here. So this is our valid setup bar. If on the next bar we trade above it, we'll go long. Well, we traded above it. We went long at 26.16, placed our stop at stop placement number 1. Here's stop placement number 2. You can calculate this if you're more aggressive. And then we finally came up with a calculation for exit. That was at 26.49. And we got out the same day. Quick 33 cents. I believe this is our 4th trade in AVB now. We went long using strategy number 4 on the 18th at 127.69, exited the next day at 129.09. And that's the beauty about strategy number 4. Once again, these trades last on average between 1 and 3 days. As you saw, some trades last only that day. You're in and out the very same day. But most trades last 2 days on average. But we made nearly a point and a half on this very quick trade. The buy-sell line is way down here. You can barely see it, so we are well above the buy-sell line. Now we're looking for a valid setup bar, which is this bar right here. All right, so this means that if on the next bar and next bar only we trade above this setup bar, we can go long. Here's the next bar. We traded above. We entered at 127.69. Because this is a very expensive stock, we're using stop placement number 1, not stop placement number 2. But it's up to you, whichever one you wanted to use. And then we came up with our calculation for exit, and the level came out to be 129.09. So we simply placed an open order to exit at 129.09. Well, at the close of the first day, things were looking good. And then the second day, we got right up to that level, and we got out. So we made a quick point and 40 cents. That's how simple this can be. All we're trying to do is be in sync with the market. We're listening to the market. Whatever stock we're trading, that's our market. And then we're just, jumping on board. We're just going whichever way it's going. Does this work 100% of the time? No. As members that have been with me for a while, you know it doesn't work 100% of the time. Sometimes we have losing days. Sometimes we have losing months. But on balance, we have a real nice level of consistency to all of our trades. And here's our last trade for the week, CAH. Once again, strategy number 4. We went long on the 18th. As typical, we got out the same day. Made a quick 46 cents, nearly a half a point. All right. Once again, we're well above the buy-sell line. We're looking for a valid setup bar, which is right here, circled in blue. The very next day, once we traded above that setup bar, we went long at 44.79. We calculated our stop placements, and we're using stop placement number 1 to be more conservative. And then lastly, we calculated our exit level, which is at 45.25, and we simply placed an open order to exit. And that's it. Really nothing more you have to do. Once you've entered, you place an open order where your stop's going to be, and you place an open order where you want to get out, and you're either going to get stopped out with a loss, or you're going to exit with a gain. Okay? It's that simple. Because we're just simply listening to the market. And we made a quick half a point in one day. Now we have one stock in play that we got into today. This was a short trade, and this was in GD. Strategy number 4. Once again, we went short on the 20th, which is today, at 73.75. This is our only stock that we have in play. As you can see, we're kind of straddling the buy-sell line. This is where a number of our students, especially the new students, have trouble. They don't really understand the concept of the buy-sell line. They'll say, well, Steve, how can you go short if we're kind of straddling this buy-sell line and the majority of the bar is above the buy-sell line, even though it closed below? Remember, if we want to take the rule into detail, the rule simply is if you get a short setup bar, the way we have here circled in blue, it's not valid unless your entry is below the buy-sell line. Okay? So if we had this setup bar here circled in blue, but our entry would have been above the buy-sell line, we would have entered above this line here, it would not be valid. But since our entry was at 73.75 today, and that is well below the buy-sell line, it's a valid trade, even though the majority of the bar is above the buy-sell line. All right, so our stop is right here, just above this setup bar. We came up with a calculation for exit, and that's at 72.74. So we have an open order to cover our short, which we shorted at 73.75. Now here's where it gets interesting. I have suggested this method very many times. It's a technique that more conservative traders use, and that's our our stop placement, where we move our stop placement down, our 70% rule. And basically what that means is once we travel the distance, 70% of the distance from where we enter to where we want to exit, we have the option to move our stop, wherever it is, to unchanged, to where we entered, in other words. That would be unchanged, because many times you'll see us come right down to this level and then turn around and change direction. And so we would hate to see a trade that was so close to turning into a winner turn into a large loser. So in order to alleviate that pain that may happen, we have moved our stop as a suggestion, as a technique, down to break even, meaning break even means where you entered the trade. So if you got stopped out, you would break even. You would exit at the same place in which you entered short. Okay? Remember, this is not a rule, this is a technique, this is a suggestion. So once we travel 70% of the distance from where we want to go, our exit level, you have the option to move your stop, wherever it is, down to the unchanged level or where you entered. So that's what we've done. So we really are not risking anything on this trade, because if it does turn direction around next week, we'll just break even on the trade. All right, so let's recap the trades we have. As you can see, we had 5 trades. 4 of them were long positions. 1 was a short position. Out of the 5, we were 5 for 5. We had 5 winners, no losers this week. Now, the points made were about 4.5 points. As you've seen in the last month, we've been on a roll. We made, I believe, 6 points the week before. I believe it was over 11 the week before that. So we've been doing very well, only because we don't have some advanced technique, or we don't know something that no one else knows. We're just listening to the market. We're just in sync. Now, at times we will be out of sync, because the market is hard to discern. The market may not know what it's going to do. It's kind of in a consolidation period, so it doesn't even know what it's doing itself. That's okay. As long as we're in sync with the market, we will have consistency. All we're doing is seeing the train leave the station, and we're jumping on board. We're not trying to pick tops. We're not trying to pick bottoms. We're just simply jumping on board and riding it for a while, okay? Now, if you really want to be able to have this consistency to your trading, this is our edge, you must learn these strategies. It's not enough just to come and watch these weekly videos. That's why we say go to the video learning section and watch them as often as possible. Once you've watched them, paper trade. Paper trade for a week, a month, 6 months if you want. That's fine, just as long as you fully understand the process. And then lastly, if you have any questions, regardless if it's about this weekly recap or about another strategy or something on the video learning section, please do not hesitate to email me at stephenprimo@specialisttrading.com. In closing, I ask that you take one last look at our disclaimer. I showed you the performance results from this past week, but remember, we can in no way guarantee that any of the results will be repeated in the future. So as you're taking one last look at our disclaimer, remember, once again, a reminder, we will not have a weekly stock review next week going into Friday the 27th. Our very next recap will be, I believe, Friday, June 3rd, going into Saturday, June 4th. Okay? Have a great week, great couple of weeks actually. We'll see you next time. Bye-bye.